You don't have to wait until your LLC or your PC is actually formed in order to start incurring expenses that are deductible on your taxes. It's true. If you're getting ready to start a business, the IRS knows that some of those initial startup costs or preparation costs are going to come from your own personal funds or that of the other owners in the business. So they've allowed for that, and they have certain rules on what can and what cannot be deducted prior to the date of incorporation. And good news, a lot of the startup costs are definitely deductible. So let's go over, what can be deducted, what is the limit of those deductions, and when you have to talk to your CPA or tax advisor in order to make a decision that's right for you. So allowable pre-formation expenses include those related to investigation, such as traveling to look at different office locations, maybe even if you have to fly there. Others include preparation costs like employee training or purchasing inventory. There's another category that's related to organizational costs, like fees that you pay the state for forming your business or for hiring an attorney or other help to actually make the business or form it or incorporate it in your state as well. So we're going to cover what are startup costs, which ones you can deduct, how much you can deduct. Can you deduct expenses if you have no income yet? So let's say you started the company in November and you don't have any income for the end of that fiscal year. You can still deduct those, but definitely check with a tax professional. And then we'll talk about the difference between, you can only do that if there's no income for a short period of time. Otherwise, the IRS starts to think that you're fishy. So we'll talk about what's known as hobby income as well. So startup costs are typically defined as one-time expenditures that are strictly linked to the opening of a new business. Most of the time, these are tax deductible. And so you should keep good track of these expenses that are incurred before you have a business account to track them automatically, or a business credit card in order to track those. So make sure if you're spending it for the business, keep receipts for everything that you think might be even tangentially related to the startup of your business, and then bring those to your bookkeeper and tax professional as well, and then let them help guide you. There's a lot more than you think, so keep all your receipts. All right, so which startup expenses can you deduct? So for investigation and preparation costs, you can deduct, a lot of what I'm about to say, and then there are some other categories as well to check with your CPA. So advertising, including advertising agency fees, if you are going to start advertising before you're formed, permits that are state and local, startup financing, so loans and investments, insurance policies, construction costs, or if you have to build out a new office space, signage, put up signs, web hosting, web domains, website creation can all be done before you actually have an LLC, and you can deduct those costs as well. Office utilities like internet, phone, employee training, supplies like a desk telephone or a laptop, you can certainly purchase those really close to the startup of your business. So inventory, shipping supplies, business cards. Although that might be like normal costs associated with a business, if you purchase them before you are incorporated, those are startup costs. And then once you're incorporated, they're just organizational costs, costs that are typical day-to-day expenses of the business. But back to pre-formation categories is the next one is organizational costs, which means forming the organization. So whether that's paying the fees to the state for your LLC, whether that is hiring an attorney or another firm to help you with that formation itself, any fees that establish the business with the government, whether that's state, local, or federal, would fall under organizational costs, and those are tax deductible as well. One category you should keep in mind, and you should never even consider this entity formation possibility, but if you're going to be a sole proprietorship, that means you don't have an entity registered with the state. You just go into business on your own. You're a sole proprietor by default, and the IRS does not allow startup costs to be deducted for sole proprietorships. All right, so how much can you deduct for startup costs? Check with your CPA, but typically it's about $5,000 for the two categories we mentioned. So for investigation and preparation, the cap is $5,000 total. And also for organizational costs, the maximum deduction is $5,000. Now, there are more intuitive rules, sorry, not intuitive, but there are more nuanced rules and caps and categories with this. So keep in mind, you can spend up to $5,000 just for some of the things you would ordinarily do to start the business, and then $5,000 for whether that's coaching or whether that is an attorney to help you for organizational costs as well. Now, larger expenses like purchasing a building or paying upfront for like an annual lease payment, those may be able to be deducted as well. And that one you should check with your financial professionals. And let's take a minute here to say, you should definitely have a CPA. A lot of them offer bookkeeping services as well, although they're a little bit separate. You can get a bookkeeper who is not a CPA, but they're just one part of your team, and you will need a team to help you grow your business, because no one can be everything. And even here, I'm an attorney, but I keep saying, go talk to your tax professional, because it's a whole separate business that now that you're a professional business, that you need to have that on your team. They'll save your money, and they will actually pay for themselves in a lot of cases, especially in the early years. Can you deduct your expenses if there's no income? Yes, but that's a qualified yes. So if you don't have any income, Twitter famously didn't have any income for about a decade. However, they were trying to make an income, or they were reinvesting money, and they did show revenue. But let's say you're a brand new business and you need a 6-month ramp up period before you're ready to see patients. You can do that early on before you're formed. But once you are formed, if there's no income for that first 6 months, if you can show IRS, one, that you're a pretty small business, two, that you are working towards generating income, and that you, if something's not working, that you're trying to change strategies in order to get some income, you can deduct business expenses and, call it a loss on your income tax, and maybe offset areas of income in other areas of your life, such as your W-2 wages, but double check with your CPA or financial professional. Now, if you're engaging in a business that isn't generating any income, and after a couple of years, the IRS might say, hey, that might be more appropriately classified as a hobby. So hobbies in tax world include those like maybe you're in a jazz band and you go get paid for a gig, every Friday night or something like that. That might be more like a hobby, or it's a different category than general income or personal income as well. So there's a number of criteria the IRS use in order to make that determination. But, for you guys that are going to be in business and have the demand for functional medicine, there's no reason for you to worry about that. I just needed to mention it so that you're aware that you can't just start a business and then deduct losses for ever and ever. So check with the IRS, check with your tax professional, but don't let not having an LLC yet stop you from starting your business and growing and getting things ready for when you're ready to see patients walk in the door. With that, if you made it this far, hopefully you've got a lot of value out of this video. It really means a lot to us if you will subscribe and click the little bell icon, but it does help the channel a lot and allows me to continue to do this and bring you value at Functional Lawyer. So thank you so much, and we'll see you guys next time.